Hey everybody, Economic Ninja here. I hope you are doing great. We're going to talk about cars today. We're going to talk about the auto industry. We're going to talk about why are you driving so fast? Holy cow. All right, my point being is this. We got some, I got a great comment from somebody. I want to read it here. And this comment comes from Brian. Brian writes, "Thank you for all your great work. I'm a long-time listener. My son drives a truck for a car hauling company and was in car sales before that. And he told me last night, this week, Capital One just pulled out of lending to dealers to cover their floor plan. He indicated this is big, as all of the dealerships he had worked with uses them. More signs of weakness in the car markets," and he sent me a link. Well, thank you so much, Brian. I want to cover this. I'm out here right now at a car dealership. It's funny. I've tried so many times to go, hey, can the Ninja come and sit on your dealership and walk around the cars and do a video? And they're always like, no. And then it's just funny. It gets all super awkward. So I got to sit out here on the street and say, look, there's a car dealership. And there's nobody there. There's nobody buying. And then every time I ask everyone at the car dealership, I'm like, how are things going? How are sales? They're like, they're great. I'm like, how can they be great? You're the only person here. There's nobody here buying. And they're like, nope, they're great. And I'm like, but you're the only salesman. And you're the sales manager. I don't get it. But my point being is I think that the optimism is now just straight up hopium when you come to car sales, because there just are not people cruising around. Sure, car selling, yes they are. Are they selling for exorbitant rates? Yes they are. They just aren't selling here, okay? I know I've talked to some of my insiders, they sell cars are still selling, but they're literally selling a $42,000 pickup truck at 25% interest rates, and after all of the payments are made, the person has literally paid over $90,000 for a 2019 F-150. This is absolutely ludicrous to me. But hey, I guess there's a sucker born every day, and I know that you're not one of them. So here we go. We're going to talk about Capital One. It is a very big deal. Why? Because Capital One has produced so much liquidity in the past for car dealerships to hold on to their flooring lines. Now, when I talk about flooring line, to give you a really easy, what it is essentially, you don't go, the car company that is selling all of these vehicles behind me, they don't just go and get a loan for this one Jeep. They don't have a loan for that Jeep, or that Jeep, or that Jeep. What they do is they go in and they buy up a swath of vehicles. They get a certain amount of money to go and buy a lot of vehicles, right? So that's their flooring. It's the amount of vehicles that are on their floor, and they have a certain, it's like a credit line, for lack of better terms, right? Well, those flooring lines can go up in value because of the cost of servicing, the amount of interest rates that are going up, things like that. And what happens if they're not moving enough cars and getting that flooring paid off, going into new debt, they're gonna run themselves into trouble. Well, Capital One is one of those companies that have been producing, giving dealerships around the country money and providing them liquidity when they need it, for a long time. And now they're pulling out because they understand that these cars are starting to fall in value, both new and used, and they don't want to be caught on the hook when these dealerships can't pay their flooring costs. So it says right here, here's what Capital One's existing flooring plan financing could mean for the car market. It's been a weird year for the car market, and things could get weirder still, as first reported by Twitter, the car dealership guy. If you haven't followed car dealership guy on Twitter, you need to go check him out. Really good channel. And now confirmed by Automotive News Reports, Capital One is out of the dealer floor plan financing business. And when I realized this may not sound like the sexiest of topics, it could have some interesting effects on the car market. In case you think of homes when you think of the term floor plan, allow me to introduce why dealers were able to hold massive inventory. Here's a little secret. Dealerships usually don't pay for every car on their lots, just like how consumers don't usually buy cars outright. Instead, they take advantage of a form of financing called a flooring plan financing. Companies that offer this sort of financing give dealers lines of credit to buy vehicles with an interest-free period. If a car on the floor plan financing sells within that period, the dealer takes the customer's money or the customer's lender's money and uses some of it to pay off the credit line. If that car doesn't sell within that period, the dealership gets charged what has usually been a small fee, since credit was nearly free for a decade. And let me stop there and explain that. That is absolutely so true. You see, whether it be automobiles, housing, or just credit card debt, credit has been literally virtually free for a decade. We have lived in the most prosperous time in the last 100 years. And I want to hearken you back to what happened during the Roaring 20s. That was a time after the Depression of 1920, which was caused by a flu, of this exorbitant, just runaway credit, runaway money printing by the Federal Reserve and the government, and people were partying their butts off for literally almost a decade until the crash of 29. And that led to the Great Depression, which I believe we are in right now. So in the last 10 years, you have seen so many gurus, money gurus, pop up and go, yeah, like I'm worth $100 million because I have literally $1 billion in debt. That number works. Yes, if you go get yourself $1 billion in debt, you're going to end up being worth $100 million just in literally how much your assets have appreciated, right, during these times. But they are all about to come to a head, to a standstill right now. And right now what is happening with Capital One is credit is shrinking because the dealerships are not going to have yet one more large bank covering them to go out and buy more vehicles. See, the thing is like this dealership here, they have already bought all of these vehicles at this price, right? If they can't sell them at this price, they're gonna have to lower them. Well, they have so many, all these fixed costs that are associated with these vehicles. Now they need to go out and buy vehicles cheaper so that they can compete. And if they can't find a company like Capital One now to go and loan them money for new flooring, they're gonna be in a lot of trouble. So it says here, that's how the finance flooring plan works. But what does Capital One exiting the business mean? Well, Capital One is far from the only company offering flooring plan financing, with Automotive News noting that does not seem to signal a trend in lenders exiting the business. I believe that's not true. I believe you're going to see more and more lenders exiting the business, especially now that Capital One has made that big leap. I think other lenders are going to go, you know what? They must know something that we don't. And that's the thing that's going on right now. A lot of lenders are like, ooh, what should we do? What should we do? Like that story I told you about the famous person that went in to finance their 7th car for $100,000. It was a used car. Only wanted to put $7,000 down on a $100,000 car. And one of my insiders was shocked to learn that the bank actually gave this person this debt. Literally, the person is in debt to credit cards almost the amount of his entire yearly salary. And when he called the bank, said, seriously, I have to know, why did you give this person a loan? They said, well, because he has this massive loan with a bank. It was Charles Schwab. I got this massive loan right here, this equity line of credit. And they said, if that bank believes in him, we're going to believe in him. And I think that's what's going on right now with these large financing houses that are financing these car dealerships. They're like going, oh, I don't think we should be doing this. Just doesn't feel right. We think that the auto apocalypse is upon us. And then when they see another big company like Capital One pull out of the business, it's going to give them a lot of guts to go, and you know what? We're pulling out too. We got to wait to see, let's just give this 6 months. And I believe you're going to see that in the next few months coming up. So it says here, that being said, Capital One is exiting the business at a time of rising costs. If you finance a new vehicle at 0% over the past decade or so, there's a good chance that the manufacturer subsidized the loan costs as an incentive. Automakers have historically done the same sort of thing for new car dealerships. Floor plan financing, allowing them to take on more and more new car inventory by helping cover some of the interest costs associated with aging inventory. Let me stop right there and also explain, this car dealership has an extra lot. It's just a dirt lot. It's its overflow lot. And it's pretty much completely empty. As a matter of fact, this dealership, which is a Dodge Jeep dealership, is pretty much empty. All these cars right here are just the edge. They're all parked along the edge to make it look full. When you go into the dealership, it's completely empty. But the dirt lot as well is pretty much empty. It's got a handful of trucks. So that's what they've been doing. All throughout my county, all these dealerships had extra dirt lots. And they're watching me right now. It's getting awkward. Point being is they had all these extra dirt lots, and what they would do is they would go out and get these very low interest rate flooring plan loans. They would buy up a ton of inventory from the dealership, and they would be able to almost act like a warehouse or a wholesaler, where they were able to pick up so many vehicles. They were able to get them at a better price and then move them out the door. The problem is, the second that the economy shifted and the consumer shifted, everything changed, and now they're sitting with this bloated inventory. Now, another thing that's really interesting about that is the pandemic obviously stopped that, right? The pandemic, they were able to, in 2018, they were bloated. 2019, completely bloated with inventory. The pandemic, with everybody's checks and ultra low interest rate and financing costs, they went in and bought up all the inventory, and then they turned around and they went, oh my gosh, now we don't have any inventory. Prices skyrocketed, and they went out, some of them went out and bought more cars, and now they're stuck with those. And that's what's really interesting to watch, how they're going to sell those. So it says here, so what happens now with the inventory? An anonymous car sales CEO, that car dealership guy, he's been anonymous for a while. Yeah, there you go. Somebody recognizes the ninja. Came out and broke the news to gain some insight. While new car dealerships aren't likely to see huge changes, used car dealerships could be in a world of hurt. According to him, dealerships that use Capital One for flooring plan financing only have 90 days to find a new lender before things get very real. Now here's a quote. They're pretty concerned, as I would be as well. Your business is on the line. You have tons of used car inventory, and you need to find another bank in 90 days. As I'm sure you know, doing any type of deal under time pressure is never good or advantageous. This isn't like Ally pulling out. That would be a disaster, clearly. That wouldn't make any sense, but it isn't something not to gloss over. It's still a big deal in the industry. I think the reality is that if anyone can't get refinanced, they'd have a tough situation and have no choice but to liquidate that inventory or pay cash. And most dealerships don't have cash like that to pay off inventory. I hope we don't get to that situation, but if you can't refi in time, you're in a bit of a pickle, to say the least. And I can't agree more. It's very interesting. Now, Ally is a massive lender in the auto industry or the dealership industry for flooring, and they're massive, right? Capital One isn't the biggest, but I do believe it is that first shot across the bow. I do believe you're about to see more lenders start to pull away or start to really tighten their restrictions, add more restrictions, make it tighter for the dealerships to, like they used to before, just get these loans at super ultra low rates and just blow it out and buy a bunch of inventory. Now they're going to start to really nitpick over it. And I think you're about to see, literally by this fall, the actual implosion of the auto industry. Guys, I hope you got something out of this. Hopefully it wasn't too loud. With that being said, the Economic Ninja is out.